We've got a very exciting 6 months ahead of us at New World. We've been making great leaps and bounds over the last 3 months, and I think we're positioned extremely well to capitalise on a rising copper price and a pro-commodities sector. New World has corporately, we've got just over 1 billion shares on issue, share price around 4.5 cents, giving us a market cap of about $45 million. Several weeks ago, we completed a capital raising. We went to market to raise $2.5 million to fund our continued exploration efforts at Antler. Within 24 hours, we had bids for well over $9 million. We accepted $3.5 million, and because we saw that we didn't want to dilute shareholders unnecessarily, and so we've currently got about $3.5 million at bank. Very strong board, very experienced in the resources sector. Myself, I'm a geologist and geophysicist, but have been working in the corporate sector for the last 15 years. Richard Hill is similar. He's a geologist, lawyer. He also has been involved in the junior resources sector for the last 15 to 20 years. Tony Polglay is one of our non-exec directors. Then Tony, his most recent job was as managing director of Avanco Resources. He took Avanco from a project acquisition down in Brazil for a high-grade copper deposit, very similar to Antler, through exploration, through permitting, through production, and ultimately several years ago taken over by Oz Minerals for $450 million. And Tony is very excited to be involved with Antler because he sees that this is a very, very similar situation to his project that he had in Brazil for the last few years. In terms of projects, New World has been building a portfolio of initially cobalt assets, but subsequently base metal assets in North America. Our project Antler is located down in northwestern Arizona. We've also got another large, extremely prospective VMS deposit at Torero in New Mexico, and a substantial land holding up in the Idaho Cobalt Belt. With Antler being our asset that's closest to production, then I will focus the rest of today's discussion on Antler. How and why did we get involved with Antler? Initially, the opportunity was brought to me late last year, and what attracted me to the opportunity was the extremely high grades of the historic production there. So there was historic production there from 1916 through to 1970, and the grades that they mined from the deposit were around about 5% copper equivalent. It's a VMS system, and VMS systems tend to have size, and they tend to form in clusters, and where there's one, there tends to be others, and so we see that there's considerable exploration potential here. The jurisdiction that we're in here is up in northwestern Arizona. It's an extremely favourable jurisdiction for developing copper deposits. Indeed, 70% of the US's copper is mined in the state of Arizona. Where we are, we're 20 kilometres from a railroad at Yucca. We're 20 kilometres from an interstate highway. The town of Kingman, which is 40 kilometres away from us, has a population of about 35,000 people. But we are in a relatively sparsely populated, arid part of Arizona, and our project is located on privately owned land, private mineral rights, private service rights, which will help expedite mine permitting. In terms of the deposit, as I've mentioned, the Antler deposit is a VMS deposit. These VMS deposits are quite prevalent in northern Arizona. There's around 40 VMS deposits that are known up there. These are hosted in Proterozoic rocks, and within Arizona itself, these deposits can be very, very large and typically high grade. The best example is the United Verde mine, where they mined 33 million tonnes of ore at a grade of almost 5% copper. And then there's some even higher grade examples, such as the UVX or United Verde extension. At Antler itself, geologically, the outcropping mineralisation has been mapped to outcrop over 750 metres of strike. We see that there is potential for extensions of that, and indeed we've done work over the last 6 months to show that we think that the system may well be bigger, but equally we know that we're in a belt of VMS deposits, and where there's one, there's likely to be others, and so we also think we might find additional mineralisation along strike from Antler. But for the time being, we've been focused on Antler itself. Why? Well, it's largely because there is substantial remaining ore resources left at Antler. So the history behind Antler is it was mined between 1916 and 1970. About 70,000 tonnes were mined. And they were mined with an incline shaft that was developed down to about 200 metres depth. All of the previous stoping took place above 150 metres of surface, and indeed all of the previous stoping was deliberately targeting the thick, high-grade portions of the deposit. The last phase of mining took place in 1970, and that phase of mining was undertaken by the company that still owns the private land parcels here at Antler. And in 1970, Standard Metals Corp temporarily, or in their mind, they temporarily shut down operations to do two things. One, the copper price had declined substantially, but two, they also saw that they needed to develop and drill out more reserves in advance of resumption of mining operations, which has never taken place. But very significantly, from the 7th level, which is 150 metres below surface, in 1968 to 1970, Standard Metals Corp completed 51 underground drill holes, and they drilled out a panel of very high confidence reserves immediately below the historic stopes. Then in 1975, Standard Metals Corp completed 9 very broadly spaced holes from surface, which delineated mineralisation over 500 metres of strike to more than 550 metres vertical depth. So in cross-section, we see that the deposit is dipping down at about 60 degrees to the west, with in circle there a panel of high confidence reserves that have been drilled from underground that have never been mined. If we go to long section, then we see in pink, looking side on here, we see in pink the areas of the historic stopes with the underground mining infrastructure delineated there. And in grey is a panel of reserves that was drilled out in 1968 to 1970 with some very high grades of mineralisation there. In 1975, still looking at that long section, then Standard Metals Corp drilled 9 very broadly spaced holes. And there's some indicators for separation between these holes here. So there's 250 metres between holes B2 and B1. There's 160 metres between holes B1 and B4. But 8 of those 9 holes hit very, very high grades of mineralisation, including 7 metres at 2.5 copper and 3.5 zinc. That is the last work prior to our involvement that was done on the project. So we've inherited a project that has got widespread high-grade drilling from surface drilling, plus a panel of drilled-out reserves immediately underground historic stopes. The work that was done in 1975 culminated with a resource calculation, which was a resource of almost 5 million tonnes. So that is our starting point. We took that data and we see that there is potentially a thicker high-grade plunging chute, which is outlined in orange on this slide. And we saw that as a first priority zone to target to delineate additional thicker high-grade mineralisation, because we see that there's a very real opportunity here to develop a high-grade mining operation for low capex in the very near term. So our objectives in the near term are to drill out that thicker high-grade panel to indicated resources, to declare a JORC compliant resource at the end of this year, and to take this through mining studies and into mine permitting as quickly as possible. We secured the asset in January 2020. We commenced drilling in March 2020. And to date, we've drilled about 4,500 metres at the project. We've completed 18 holes and are drilling our 19th hole at present. The first 6 holes that we drilled were in the shallow levels, essentially confirmatory holes that were confirming that there is still thick high-grade mineralisation remaining. And in the top yellow box there, which is one of the first 6 holes that we drill, you can see that within 20 metres of the shaft, and within 100 metres of surface, we intersected 13 metres at 3.5% copper and 5% zinc. So very quickly, we had faith that there was a sizable resource base here. So we started testing this interpretation that there's potentially a thicker, high-grade shoot extending to depth. Our next phase of drilling, with holes that were typically spaced 50 to 100 metres apart, started systematically testing the down dip extent of this thicker shoot. In the last couple of weeks, we've reported some exceptional thicknesses of very high-grade mineralisation, including the result in hole 17, which was 30.5 metres at 3.6% copper equivalent. Now, to put that in perspective, the value of that intercept is comparable to intersecting 3.5 metres at an ounce per tonne gold. This is highly valuable mineralisation that we've got here. And it's very, very thick. So we continue to drill, and we continue to drill this thicker, high-grade shoot that we're proving is there, and we will mobilise a second rig to site in next week to expedite our drilling. The significance of the thick mineralisation here is illustrated by this block on the bottom of this slide. This panel of potential ore, if it measures 100 metres times 50 metres, 100 metres vertically by 50 metres laterally by 20 metres thick, which is about the average thickness of this, equates to around 390,000 tonnes of mineralisation. Now that's in same identical scale. That block of ore there is identical scale to the long section. So if you envisage if we can overlap a series of these 390,000 tonne blocks of ore on that long section where we've got mineralisation over 500 metres of strike to 550 metres of depth, very quickly we are going to delineate a very sizable ore deposit that will have very favourable economics for development because of the grade and because of the proximity to surface and the proximity to very good infrastructure. But to date, our focus has solely been on the 150 metres of strike where there has been historic stoping. Several months ago, we completed a detailed magnetic survey over the Antler deposit. There is a magnetic mineral called pyrrhotite that is intimately associated with mineralisation at the Antler deposit. And because of that, the Antler deposit, which is shown in blue here, and the stopes that are at the Antler deposit, show that there is a very, very strong coincident aeromagnetic anomaly. Very significantly, that magnetic anomaly extends for over 1,000 metres of strike. So it is very likely that additional mineralisation along strike from Antler is giving rise to that 1,000 metre long magnetic anomaly. Indeed, the yellow zone, which we have been seeing in the southern end or the right-hand end of the long sections that we've been showing, has been drilled out in some detail, but still with very broadly spaced holes. And we know that just about every hole along that 300 metres in yellow there has intersected high-grade mineralisation. A further 250 metres to the south in hole B5, then that hole 250 metres below surface has also intersected VMS mineralisation. It looks highly likely that we will be able to delineate additional resources immediately to the south of the Antler deposit. We will commence drilling there very, very shortly, but before doing so, we are going to complete an IP survey over that corridor. That IP survey is scheduled to start on Friday this week. And that IP survey should take 2 weeks to complete. And then we will start drill testing this corridor. It is highly likely IP will work. We can see visually there's abundant sulfides. We've done petrophysics on core from 20 samples of core from the deposit, and they all show that there's an extremely strong, in excess of 100 millivolt per volt IP response. So IP should work. Concurrently, we're also running metallurgical test work. Historically, the metallurgy from the deposit was good. They were getting recoveries of 87% copper and 77% zinc when they mined it in 1970. So we anticipate that we will be able to at least match that, if not exceed it, and we continue to advance our metallurgical test work. So in summary, over the next 6 months, we have a huge amount of work that is going on at the project. We have one rig that has been drilling since March. A second rig arrives later next week. An IP survey starts next week, and we will continue to drill this through to November. In November, we anticipate having a maiden JORC resource on this, embarking upon mining studies and moving the project into mine permitting extremely quickly. Thank you.
Thank you very much, Mike. That was fantastic. A few questions have come in. One investor has asked, given that the known copper prospects in the area, are you moving to lock up more of the land around Antler?
Yes, we do see that these deposits do form in clusters. We are aware of additional mineralisation along strike from us, and we have been working to secure additional land holdings.
Right. And given the historic resource we know there, is that any guide to the sort of maiden JORC resource that you would expect?
We see the historic resource as an absolute base case. So we see that as our starting point. At that time that they calculated that resource in 1975, they weren't aware of the thicker mineralisation that we've encountered. And indeed, we see that there's 1,000 metres of strike potential there just at Antler alone. And previously, the drilling had only tested, at best, 400 to 500 metres of that strike. So we see that as a base case that we are working from.
And are there any problems obtaining or securing approvals for the project in New Mexico?
In New Mexico, there won't be any problems securing permits. It's just been a longer lead time to secure those permits because of the nature of the land. The nature of the land in New Mexico is US Forestry Services land. It's shared land use. Categorically, exploration and mining is permitted on US Forestry Services land, and we are just working with the regulators as we do the necessary studies in order to have our permits in place.
And what's the situation with environmental permitting in Arizona?
Arizona is a fantastic place to operate. As I say, we are on privately owned land here. If we could constrain a mining operation entirely to that privately owned land, there would be extremely minimal permitting requirements. There is always the onus on the operator to prove that they're not going to contaminate off-site, and so there will be some groundwater studies that will be required and air quality studies that will be required. But for all intents and purposes, mine permitting in Arizona is a very proven, relatively simple process.
And given that Antler is a VMS deposit, is it likely to be relatively small, as is often the way with VMS, or is there potential for it to be larger than would ordinarily be the case?
I think the United Verde deposit that's located about 150 kilometres away from us in northern Arizona, where they mine 33 million tonnes of almost 5% copper ore, is testament to the fact that these VMS deposits in identical age rocks, these can be very, very big. Again, I'll go back to that historic resource. We see that 4.7 million tonne historic resource as a base case. We are very confident that we will discover a larger deposit than that. But how big it can be, that's going to take time. But I think very quickly we're proving that the grade continues and the tonnes are there. And so I don't think it's unrealistic to expect a 5 to 10 million tonne deposit and maybe bigger.
And finally, what's happened to your cobalt projects?
So the cobalt price, when we got involved with cobalt, was at about $25,000 a tonne. It ran up to about $95,000 a tonne and has retracted back to about $35,000 a tonne. Our holding cost for the cobalt projects is around $40,000 US a year. If we pay that annual payment of $40,000 a year, we can hold 100% interest in our projects with no work requirements. And so for the time being, we are just making that annual payment. We have a very strong belief that the battery metals, particularly for electric vehicle growth, is here to stay. We think that we are very confident there will be a resurgence in the cobalt price, and for that reason we continue to sit and hold those assets until the cobalt price shows signs of recovering, which I might add over the last 2 to 4 weeks there have certainly been some pretty positive signs for the cobalt sector.